So welcome back. We are going to wrap up the day with a platform session to review everything that we've covered today. Again, we are recording all of these. They will be available on the Nadex website under the webinars section. It'll be made available on demand. It'll also be on the Nadex YouTube channel. We'll make it its own playlist, so you'll be able to play these one session after the other and review them at your leisure. Hey, listen, people are binge watching everything. You'll be able to go back and binge watch Nadex education. And hopefully, again, please, hopefully you'll join us tomorrow for our more advanced topics. We're going to up the game a little bit. So before I get into this last session, I'm going to put up a little title slide. This is what we're going to cover: knockout options, binary options, and the new Nadex platform. I really do. I think you're going to have fun. If you haven't seen the new platform, if you haven't been using it, it is really quite slick. We've added a ton of functionality, and I will say that I believe our charting functionality now on the new platform is it surpasses that of the old platform, and we are going to be migrating everyone to the new platform at some point, and that's coming sooner rather than later. So, and I am required, I gotta always do this. You know, as I started the day, I'm going to end the day reminding you that this is brought to you by our compliance department, and that trading does involve risk, and that you need to be responsible for your own trading decisions. That is solely your own responsibility. And I am going to tell you now for sure, I am going to go onto the platform. It will, I think I'm going to use live markets because it's a little bit more fun to look at. I'm not going to be in the demo environment. I am going to point that out though. And you'll notice, but nothing that I say should be construed as a buy or sell recommendation. I am doing this strictly for educational purposes. I cannot emphasize that enough. And I do like to put this up as well. You know I've got two colleagues in the background that have been superstars today. Marcus and Nelson have been incredible helping with the questions. By all means, keep them coming. We are trying to answer all of them, and we're here to help you. Nadex is here to help you on your journey, and if you reach out to us, we can certainly help you more. So one, please, by all means, type in questions while we're doing this, or feel free to call us or email us. There is also, you know what? I am going to show you one more way you can get in touch with us. And let me switch my screen as I jump over to the platform. Here we go. I am going to show you down here in the bottom right-hand corner, when you go to nadex.com, we do have chat with an expert. So this is even a new way. I clicked on it and it's going to load and pop up, but you can reach out to us this way as well. So I can't emphasize enough, we want to see you successful. We want to offer as much support to you as we can. And if there's anything that we can do, you can call us, you can email us, you can even chat us. All right, I am now going to go ahead. Oh, by the way, since I mentioned it, I'm going to the webinar section of our website first. Let's just go ahead and take a peek over here. There's the session today, the session tomorrow, and you'll see all of our upcoming sessions as well. And we archive all of it, so all the recordings are there. But if, in case you were curious, what we're covering tomorrow, all right, I'm going to be starting the day off with doing a little bit of a deeper dive into technical analysis, more than what I'm going to do today. I'm actually going to pick out some different indicators and show you how to put them on a chart and how you can use them. Things like moving averages, trend lines. I know Brian had his concerns about support and resistance, but we'll do that. He mentioned Fibonacci retracements. I'm going to be doing much more of that in a practical way. I'm just going to show you how to do it, and then you can see how you can potentially interpret it, and it'll help you in your trading decisions. Brian is also going to step it up with, he mentioned average true range and how that can be used to help you find entry and exit levels on different Nadex products. We've got another third party, another great partner of ours, Rockwell Trading, and they're going to go through a knockout strategy. They're going to go through a knockout strategy that they like to teach and what they like to show. I'm a big fan of knockouts. And in fact, that's probably where I'm going to start our session today. And then my colleague Dan Cook is going to bring it home tomorrow. He'll be back, and he's going to show you definitely a more advanced trading concept. You might have heard about strangles and equity options, but you can actually do strangles with binary options as well. Dan will be getting into that. So please join us tomorrow. Again, we'll be recording all of that, and that too will be available on the Nadex website as well as our YouTube channel. I am going to go ahead now and log into the platform. When I click login, we mentioned the new Nadex trading platform. We currently call it beta, and that is going to change. I am going to go ahead and click on join the beta, and we do have, and this has come up today, people have been asking, we do have two environments. We have a demo environment. You can sign up for a demo account. What it does is it allows you to paper trade. We do have live prices in there, but they're not live markets. So you'll see prices that are replicated in the live markets, but your interaction with demo prices is not going to be the same as interaction with live prices because you got different people looking at it, and it is just paper money. But if you're trying to become familiar with the platform, or if you're a brand new beginner and need to get more comfortable with the products, how they work, I would highly recommend you open a demo account and practice in a demo environment before you go live. We find that our customers who do that are more successful if they go through demo first for a brief period of time before they jump into the live markets. I am going to sign into the live because I want to see the real-time quotes right now. I'm not going to be doing any trades. That's okay because I can't do that, but I want to make sure that you can see what the experience is like on our new Nadex platform. Now, if you've never seen this before, it is broken up into sections. On the left are our products, binary options, call spreads, and what we've really been focusing on is knockouts. I know we haven't talked a lot about call spreads. Call spreads similar to knockouts, with the exception that if it hits one of the boundaries, one of the levels, you're not knocked out of the trade. You have longer for your opinion to be right. But because you're knocked out and there is optionality, there's a little bit of a premium in that product. But I really want to focus on our core products, binaries, the all or nothing, 0 or 100, or knockouts, which actually track the price of the underlying. On the bottom, you'll see your positions page. This is where you would see orders, any positions, and you can even look up your history. I am actually going to hide that section for now. And then you'll notice that we've got your workspace. This is where the charts will show up. This is also where your order ticket will show up. Now, we did binaries, knockouts, and then charts. I'm actually going to mix the order up a little bit, and I want to start with knockouts. I personally find knockouts to be much more intuitive, and it really is trading the price of an underlying asset. So when I click knockouts, you do see what products we offer knockout options in: indices, foreign exchange, and commodities. I think we've done some examples in the indices where, and by the way, the names for these, we don't have the rights to the names because they're registered trademarks, but these do settle against the futures contracts. So when you see US 500, that is the S&P 500. When you see US Small Cap 2000, that is the Russell 2000. If you're not familiar with Russell, they indexed the markets. They took the top 3,000 stocks in the United States. The top 1,000 is the Russell 1000, and that is actually very similar to the S&P 500. Instead of 500 stocks, it's 1,000. But then they took the next 2,000, the bottom, the mid caps and small caps. So here's your mid cap, small cap. There's the Nasdaq, which is the Tech 100, and then the Dow Jones, the Wall Street 30. You can trade knockouts against all of these. only because it's been so popular, I am going to go to the commodities, and we do have these new products, knockouts in oil and gold. And I like to use crude as an example. I'm just using this as an example. And Dan mentioned it earlier today. The reason I think this is super cool, again, the oil markets got very volatile. We all saw it in the news. And in more traditional places, people were precluded from being able to access movement in the price of oil because they couldn't manage the risk. The volatility was too high. At Nadex, these oil markets were always lit. You could trade the price of oil in knockouts or binaries because we have defined risk reward. And because of that, we never had to concern ourselves with managing extreme risk that others experienced. I mean, a lot of people simply weren't able to handle the volatility in the price of of oil. As Dan mentioned, for each one of our knockout products, there are 4 knockout ranges for each one. When I open it up, I am going to just randomly pick one because it doesn't even matter. I'm just going to click on one, and I'll show you why it doesn't matter in a second. I am going to go down here and hide this so that we just have a chart, and I am going to zoom in on this chart some, and let's shrink it a bit. Actually, we could zoom out. I want to make it so that we can see it. And let's go ahead and make this more than a 1-minute chart. Let's make it a 10-minute chart. Okay, give us some room. Okay, I think this is a nice picture here of what I'm trying to represent. Okay, we talk about knockouts. There we go. All right, we have 4 knockouts for each product. On our charts, we make it easy. That's why I said it didn't matter which one I pick. You can see the range for each separate knockout. They are indicated by these blue lines on the left-hand side. If I click on any one of these, you will see the knockout range for that contract. If I pick the next one down, you'll see how the floor and the ceiling each adjust accordingly. Okay? I could pick this one down here. This one's obviously looks like it got knocked out, and then we put it back in. So now I am going to pick one where oil is in between. Now, what do I think oil is doing? Do I think the price of oil is going to go up, or do I think it's going to go down? Let's just for fun say that I think the price of oil is going to go down. So I am going to pick this particular contract, which is the 30.5, and you can see the floor is indicated by 30.5 and the ceiling at 35.5. In fact, that is actually the product that we're on right now. Oil is currently trading right in between that range, and that's fine. Let's actually slide this over a little bit. So, okay, now, how does the binary work? And Dan went through this, and I think it's very easy to see when we're on a platform, when we're in the platform, and again, I'm just making an argument. Notice that the price of oil, the indicative price, is currently 32.73. It is also here in our chart, 32.73. This is what's kind of cool, and it's easy to understand what the price that I'm trading. The price of the knockouts will be right around the price, the indicative price of the underlying. So it's that's what we're trading. We are trading the price of the underlying. Do I think oil is going up? Do I think oil is going down? If I think it's going up, I buy it. If I think it's going down, I sell it. Now, I just said for an argument, I think oil is going to go lower. Again, not a buy or sell recommendation, just an example. I could sell one. So I click sell. Now, as Dan mentioned, you don't always have to trade these prices. I can always choose to put something in between. I'm actually going to put 32.72 just because it's exact. Actually, it's just 32.70. Nice, simple, round number. Now, if you notice, these are $5 wide. This total contract is worth $500. If I were to sell one of these, all right, so I'm thinking the price of oil is going to go down, and I sold one at 32.70, okay? I want the price of oil to go lower, and if it goes down and hits 30 and a half, I will get knocked out of the trade for my maximum potential profit, and it tells me that that is $220. Okay, so oil goes, I sell it at 32.70 and it drops down and touches 30 and a half. That's a potential profit of $220. Now, if I'm wrong and oil rallies, okay, the price of oil goes higher and it hits 35 and a half, I will get knocked out, basically a stop loss on my short trade, and I would lose $280. Okay, so I know going into it, this is why Nadex was able to keep our oil markets open, is whenever somebody comes in, they fully collateralize their trade. Like I mentioned on binaries, it's the same is true for knockouts. Basically here, if I sold one at 32.70, I would be risking 280 to potentially make 220. If I'm right and it goes down and I get knocked out at the lower boundary, I make my maximum profit. If I'm wrong and it hits the upper boundary, hits the ceiling, I would experience my maximum potential loss. Now, I picked a knockout that's right in the middle. If you wanted to give yourself more potential profit and a little less risk, you simply pick a different boundary, a different knockout range. So I'm going to click the next one down, okay? And here we are, and I'm going to click sell so we could see. Now, here, let's put that 70 back in. That's the level that I was thinking I wanted to sell. Notice that it's still $5 wide. It's 29.5 to 34.5. But what have I done? I brought my ceiling from 35.5 down to 34.5. So my maximum potential loss is only 180. Here, I said I don't want to experience that much risk. I want my stop loss, essentially, my knockout if I'm wrong, because I'm selling, to be a little bit closer. But it gives me more room to the downside if I thought oil was really going to sell off and go lower. So my maximum potential profit actually increases to 320. So it really matters is, as Brian mentioned, the greatest indicator is you. What is your opinion? What is it that you think is going to happen? Do I think the price of oil is going to be going up? Or do I think the price of oil is going down? And with knockouts, I can very cleanly and I can very easily take an opinion on the price of oil and buy or sell a knockout in a defined risk, defined reward way, and choose where that risk reward level is based on picking the right knockout contract. Okay, and let's flip this around. If I thought oil was going to go higher, okay, I'm going to pick a different range. Okay, here's the highest range that we've got right now. Here's one where if I wanted to buy oil, and let's go ahead and put it in between 35.75. Here's one where I think the price of oil is going to continue to go up. I think it's going to bounce from this level. But if I'm wrong, this is and it always tells you right on the order ticket, all right, 31.5, 36.5. And again, this is a $5 range. It tells you where those boundaries are. So where I would be knocked out. That's why they call them knockouts. You get knocked out of the trade one way or the other. If I were to buy this and the price of oil, if I were to buy it right here at 32.75 and oil dropped down to 31.5, I would get knocked out, essentially a stop loss, if oil kept on going lower, and there is no slippage. We simply settle the contract. It touches that boundary, you are knocked out. And here, if I were buying it, I know that I'm only risking $125. All right. And if oil were to go higher, my maximum potential profit, 36 and a half, oil would have to rally all the way to the 36 and a half for me to get knocked out. Now, the question is, what happens if oil doesn't touch either one of those boundaries? As you can see in the time frame I've chosen here, it hasn't. And we know that this will settle in 2 days. In 2 days, one day and 23 hours. So just shy of 2 days, this will settle. What happens? Now, unlike a binary option, which is all or nothing, it either goes to 100 or it goes to 0, right? A knockout is not an all or nothing. If I were to buy oil right here at 32.75, because I thought it was going higher, if oil doesn't touch either boundary and settles at settlement tomorrow, my profit or loss will be the difference between the level I bought, and I was buying at 32.75, and the settlement price. So if oil settles higher than 32.75, if it goes back up and settles at 34, I would have a profit. If it settles at 35, I would have more of a profit. If it settled lower, down at 32, I would have a loss. All right, I would have a loss. And I know, though, that my maximum loss would be if it went down to 31 and a half, touched 31 and a half, I would have been knocked out of the trade. I would have experienced a $125 loss. All right. But if it doesn't touch 31 and a half, it goes down and comes down a little closer and then comes back up, and it never touches where it settles tomorrow. Then I would be able to know, did I make a profit or loss? So with a knockout, you are trading the price of the underlying. It will track the price of the underlying. That is why a lot of people like knockouts. It's a very clean way in a small dollar value with a very, very low cost of entry for you to gain exposure to the asset. So here it's the price of oil. I can do this, and I'm just using oil now, but let's go ahead and just take a quick peek. Let's go to indices for a second, and I'm just going to go to the S&P 500, and we're just going to pick any one of them once again. If you had an opinion, let's hide this, on what was going to happen to the S&P 500, you can certainly play that with knockouts. Again, you're going to trade. Look at this. The S&P, they're currently trading at 3016, and my markets are right around 3016, 26, 28. The markets are going to be right around the underlying, okay? And again, you can always put an order in between if you like, and you know you've got defined risk, defined reward. If it goes your way and you get knocked out for your profit, if it goes against you, you're knocked out for your loss. And if it doesn't touch at all, your P&L, your profit and loss, would be the difference or the variation between where you bought or sold and where it settles. Very clean, very easy to understand. Now, I want to jump back. So I happen to like starting with knockouts because it is easy to understand. It is the price of the actual underlying with your parameters around where you want to have your risk levels. And it all depends on if you think it's going up or if you think it's going down. Looks like I have something drawn on here. So let's delete all drawings. There we go. So I'm going to get into that in a second. Let's jump over now to binary options, all right, where we started the day. And since I was talking about oil earlier, let's go ahead and take a look at crude oil binary options, and you'll see how they're different. All right, now when I bring up crude oil, I'm going to have a variety of different strikes. This is the yes or no question. Do I think this is going to happen? Yes or no? I am going to pick the one that is right at the money right now. I'm going to click on that, and we're going to populate the chart. I am also going to move this out of the way so it's easier to see. Maybe I'll even, I'm going to zoom in on the chart a little bit. Make it easier for you to see it entirely, okay? So here we are with, again, the indicative price of oil, 32.76. And this is, will oil finish above 32.75? And again, it tells me it's 1 day and 23 hours because I picked the weekly contract. Okay. It's right here. The price of this binary is right around 50. They're giving it a 50-50 chance. And let's go ahead and click on buy. And I want to put 50 in there for a reason. Okay. Now, when I click buy on a binary, notice what happened to the chart. All right, I kind of like this. The part of the chart above shaded blue. This tells me where on the chart oil would have to settle for this contract to settle at 100. Okay, so I know I need oil to be in this blue range. If it does not settle in the blue range, what is going to happen? What's going to happen is it settles below this level and this contract would settle at 0. Since it's right here, I mean, this is right here at the money, okay? The market is giving it a 50-50 proposition, right? That this is going to finish above this level. I don't know what's going to happen in the next 2 days, but then again, no one else can really positively predict that, but we can see since it's right here, that's the 50% chance that this question, will crude oil finish higher than 32.75, be true? All right, the market's giving it a 50% chance. Now, because these contracts are worth $100, if I were to buy one at 50, I'd be risking 50 to potentially make 50. Now let's take the other side. Let's say I thought oil was not going to finish above 32.75, so I want to sell this. And again, I'm going to use that 50 just so you can see. Actually, yeah, why not? Notice here, all right, this is where the oil would have to settle for this to be a profitable trade. It's the red zone. I am short. I am selling the price of oil. I'm saying I don't think oil is going to be above 32.75 tomorrow. And I'm willing to risk 50 to make 50. But it tells you right on the chart where it would have to settle for your prediction to be true. Now, again, remember, unlike a knockout, where if I were to sell this and oil were to stay right here where it is right now, it's at 32.80. If I sold this and I was saying it's not gonna be greater than 32.75, if I sold this, I would sell this for 50 and it would settle at 0. I would lose all 50 because if it finished right here at 32.80, that is above 32.75. So this contract will settle at 100 if this is where it closes and settles at the end of tomorrow. It is either worth 100 or it is worth 0. It is all or nothing. Now, as Dan had also mentioned, just like with knockouts and just like with binaries, just because there's an expiration associated with the product doesn't mean I have to wait to expiration to see what happens. If I sold this at 50 and it traded lower, okay, and all of a sudden it was worth, and let's say it trades down to 31.75 and this becomes, the probability on this, the probability on this 32.75, I sold it at 50 and the probability goes down to 30% because it went lower, I can always buy it back for a $20 profit and be done with it. All right. If I were to sell this and it went up and oil went up and the probability of this being true goes from 50 to 80 because the price of oil went higher, I can always just buy it back for a partial loss. So I sell it at 50 and it goes up and now it's trading 80. I can buy it back for 80 and only lose the 30, not the full 50. Okay, so you can trade these. Knockouts are the same way. If you buy or sell a level and it goes your way, you can take the trade off early for a profit and recognize that profit, or you can unwind it if it went against you for a partial loss. you can choose to unwind your position before expiration. And that if you take nothing else away from today, Dan hit that home, I'm hitting that home. I think Brian had even mentioned it, is you don't have to wait to expiration to see what happens. You can, but you don't have to. All right, so that was my review. I went through knockouts, and I love how on our charts, let's go back to knockouts real quickly. I love how, actually, let's go to, I'm just going to use an index for fun. Here's the Nasdaq. I like how on our charts, and let's use a little bit longer time frame and zoom it out some. Our charts are customizable. I like how we have, and let's move this over too, sorry. I like how we have each knockout level clearly defined on the chart so you can pick what you want and what range suits your risk profile based upon what you think might happen, okay? And again, you can have an opinion. If it touches one of the boundaries, you'll be knocked out for a profit or for a loss, or you can trade out of it early. I like how we have those on the charts. For binaries, I am going to go to a 5-minute binary because, we did this a little earlier. It was kind of fun to watch. And I'm going to just pick, I happen to like the euro. We've got a plenty of other pairs to choose. On the binaries, I do like how, let's spread this out a little bit more. Let's zoom in. I want to be able to see all the different strikes. You know what? That's because I got a 1-hour chart. Let's go to a 1-minute chart. Yeah, it'll be a little easier to do. And Brian had covered the difference on the ranges on how you choose a chart. And here's a very short-term binary contract. This thing is going to settle in 1 minute and 13 seconds. And in fact, I'm going to stay here for a minute because I just want you to be able to see on binaries, these will either go to 0 or 100. Notice that this one here is trading up near 100 right now because there's only a less than a minute to go. The 109.93, and it's clearly above. And notice the 109.95, the probability is shrinking dramatically because we're going down. But the price of these binaries, I mean, look at that. This thing's going to go, now they're basically saying in the next 30 seconds, is it going to get back above here? Yes or no? People are kind of saying no. Is it going to stay above here? People are saying yes. And I don't know what's going to happen in the next 24 seconds. As you get into the last few seconds, you'll see that the markets will disappear because there's just simply too much risk in the last 10 seconds to know exactly what's going to happen. There we go into the last 10 seconds, and you notice that you can't trade out of it. And this thing, it looks like it's going to stay right here. We're doing the countdown. It's like a horse race. 3, 2, 1. It ended. There we go. Now, what was interesting is you just saw something else happen. Those settled. This previous 109.95, it settled at 0. It went to 0. This one went to 100, and we immediately listed another 5-minute binary contract. Okay? I'm going to click on a buy here just so you can see. Now, you're going to watch this horse race happen again over the course of the next 5 minutes. You'll see, the price action on 5-minute binaries is exciting. There is a lot of movement. Again, it's the probability of this thing being true or false, and you can see how quickly these markets can change as the price of the underlying moves. And as you get closer and closer to it settling, so every 5 minutes there is one of these 4x, and we have it on a variety of these, and you're watching very dynamically the probabilities of these change quickly. So lots of price action on 5-minute binaries in foreign exchange. Now, the last thing I wanted to show as we wrap up is I want to talk a little bit more about our charts. I'm actually going to go ahead and not use a 5-minute. Let's go ahead and pick a chart. Let's go ahead and use the S&P 500. I'm going to use the weekly, and I'm going to just go ahead and pick any one of these. Okay, I just want to get a chart up here. I'm going to hide this. And I mentioned that we have some pretty incredible functionality baked into these charts. I'm actually going to go ahead and get rid of the order ticket as well so that we have more chart. That's all I really want to see is chart. We do have all the different time frames. As Brian had mentioned, what are you looking at? You can customize your chart however you like. Here's a 1 hour chart. There was the day that it was closed. And we can take a look at, and we're on a binary chart, so we don't see the knockout spreads, but I'm looking at the S&P 500. What has it done over the last it actually goes all the way back until April. We do have, you can also change the range, whatever you would like, you can customize it. But what I'd really like to show you is what Brian was talking about. We do have indicators and we do have drawings. Okay, and I'm not going to get into depth with these at the moment. I just want you to be aware that they're there and that you can customize this any way you like. When I say indicators, look at, we've got, and I should know the number. Was that 25-ish? Different indicators. Brian is going to be covering average true range tomorrow. Bollinger Bands tend to be very popular. There are, Brian had mentioned some of these moving average, convergence, divergence, moving averages. Again, I'll get into all these. If you wanted to take a look at moving averages, I'm just going to go ahead and click it. This is on a 1 hour chart. If you aren't familiar with what any of these are, there's the little information box that actually tells you what the indicator is trying to help you with. Okay, now I will tell you one thing about charts. I think charts are incredible. I think they can be very useful. What can be a little difficult is putting too many things on your chart because it'll be just information overload. So it's up to each individual trader to try to find something that works for them. So when Brian said the best indicator is you, it's what works for you. How do you read the chart? What are you seeing? What is your opinion? And which of the indicators help you on your journey? So it really is a personal choice. But I did throw moving averages on here. Notice that we will pre-populate the moving averages with the standard, and I'm going to click on this down here in the left-hand corner. It does give you the standard 20, 50, and 100 bar. You can add or change these. What that means is, and the 20, 50, and 100 is each one of these moving averages is based on 1 hour. So 20 hours, 50 hours, and 100 hours. If I wanted to take a little bit longer view, like a daily view, you're going to see different moving averages, okay? Because I'm using a different base. I'm going to go back to the 1 hour just because it's a nice, pretty chart, and I could zoom out and we can really see what the S&P 500 is done. And something else you'll just kind of notice, like with moving averages, I'll get more into this. The shorter term ones are going to follow along with the chart because it's only a 20-hour moving average. The longer term one, the red one, which is 100 hours, is going to be smoothed out a little bit more. I will cover more about moving averages tomorrow. But I did want to show you that you do have a variety of different indicators that are built into the Nadex charting platform. I also want to show you some of our drawing tools. All right, when I click on drawing, you can put your own drawings on here. Now, people look at different things in different time frames. Sometimes people want to put their own support and resistance lines. Brian mentioned he's not a big fan of it, but a lot of people are. They like to see where are there levels where there are, it seems to be buyers and sellers. And if I wanted to put a horizontal line and sort of fit it and look at what levels based on this, and here I'm just going to draw one in, and I'm actually going to let's zoom in a little closer so you can see it better. It's this black line right here. This could be a level where I see it was resistance. When it broke through, it became support. When it broke through, it kind of became resistance. When it broke through again, it sort of has shown support. People can build their own support and resistance levels simply by drawing horizontal lines on their charts, and you got to determine what those levels are. I'm going to delete that. There are other, Brian had mentioned, and I'm just going to show you Fibonacci just because he had thrown that out there, and I might get a little bit more into this in depth again tomorrow because I happen to like the Fibonacci, and the way it works is you can fit it to your chart, and you can see where there have been support. Oh, I didn't click it. There we go. Where based on Fibonacci retracement levels, where there tends to be support and resistance based on the Fibonacci calculation. If you don't know what that is, it's a natural recurring mathematical calculation in nature, and people tend to use that same calculation for analyzing charts. But again, this is just basics. I wanted you to be aware that we do have these drawing tools and that you can put your own trend lines in, your own Fibonacci's in, your own channels, your own support and resistance levels. You can add in a variety of technical indicators. And I know it is, and Brian and I are, you get two sides of the story. It is kind of cool to know how they work and how they're calculated. But in the end, if you know how to use it and it works for you, that is perfectly fine as well. So it has been a long day, and I really do appreciate everyone joining us. I think we've covered a lot. We went through the basics of binaries, the basics of knockouts, a foundation for technical analysis, and I went through on the platform just the basics, showing you binaries on the platform and how you can see how the price of binaries will move and how you can choose your level and which binary product you might want to participate in. Again, it being the probability of the event happening, yes or no. And then you can see as it gets close to expiration, particularly when I show you in 5-minute binaries, how volatile that can be. But there is an indication on the chart where it would have to settle for this to either go to 100 or to 0, and it's an all or nothing proposition. Versus knockouts, where we give you nice clean levels on the chart on where you would be knocked out. You're trading the underlying, the price of the underlying asset, and you can get knocked out for a loss and stop your losses if you're wrong, get knocked out for a profit and take your maximum potential profit if you're right, or if it settles in between, your profit or loss would be the difference between where you bought or sold and where it settles. And lastly, we've got a lot of functionality in our charts. Our charts have really been beefed up with a variety of technical indicators and drawing tools for you to analyze the markets your way to help you along on your journey. With that, I want to thank you again for sticking with us all day. That was a lot. We are recording all of this. It will eventually be available on the Nadex website. Under the webinar section, in the on-demand section. It will also be on the Nadex YouTube channel. And we'll put it in its own playlist. So you'll find all the sessions today. We are going to break them up into 4 separate sessions to make it a little easier. And again, we'll record tomorrow. If you aren't registered for tomorrow, I would encourage you to come and join us for a little bit more advanced topics to help you on your journey. But know that we will be recording those, and those will be available to you as well. Again, I want to thank you all for joining us today. And with that, I do want to, oh, you know what? I'm going to do one more thing real quickly. Before I sign out, there was a question, and I am going to do this. You know what? This is kind of cool, and I want to show this. And I could do this again tomorrow. Marcus and Nelson mentioned, people do want to see. Let me log out of live. I want to do one thing for you guys today. I'm going to jump over to a demo account. And let's log in real quickly. Oops, you know what? Let's join the beta. Let's click a demo account. That's my demo account. I'm going to log in quickly. This is a demo environment, okay? And I'm going to go to a knockout. Let's just go to a knockout for, you know what? Better yet, let's go ahead and do a 5-minute binary. Here's what I'm going to do. Let's just have a little fun with this. Let's go back into the euro, and I'm going to click on one of these. How much time do we have? We have 3 minutes left in this, so let's get this out of the way. This is always kind of fun. And this is, again, not a buy or sell recommendation. This is simply a demo, okay? I am in the demo environment. And I want to slide this chart here. All right, there's 2 minutes left. Do I think this is going to keep going higher? I'm just going to buy one, okay? I just bought one of these what did I pay? I paid 42 1/4. Okay, I just went ahead and bought one because I thought this was going to keep going higher. Okay, now I don't know what's going to happen in the next 2 minutes and 20 seconds. I can either wait and maybe this goes to 100, okay, or you know what? It's rallying up. Look at that. I'm getting lucky and this thing is rallied and I just want to go ahead and take my profit. I went ahead and just sold it, okay? I bought one and sold one very quickly. I look at my history and I bought one for 42 1/4 and very quickly I sold it back out at 50 and made $8.75, okay? Not a buy, sell, or hold recommendation, not a trade recommendation. I just wanted to show you how I bought one of these. It went my way, and in 30 seconds, I went ahead and sold it back out and took a quick profit. Look it, I'm glad I did, because as we move on in time, 1 minute and 30 seconds, the euro, this is traded lower, and now there's a less and less a likely chance, and maybe I think it's going to keep going lower. Maybe I want to go ahead and just sell one now, okay? I don't even know if I can. Okay, so there I actually put an order in. I put it between the markets and, I think I just traded. It actually traded. All right, again, I don't know what's going to happen. I'm not buying it, but I just went ahead and sold it because I think it's going to settle at 0. Okay, I think it's going to keep going down. There's 55 seconds. I did sell it at 23 1/4. And oh, look it's rallying back up. Uh-oh, maybe I'm wrong. Here it goes. It's rallying above. I better buy it back. I'm wrong. And I placed an order to go ahead and buy it back. I felt I was wrong. Maybe I shouldn't have. This is look at that. And if I had done nothing, it's probably going to settle at 0. I could have but I got nervous. All right. 1, I made a profit. 1, I took a loss. Okay. Interestingly enough, yeah. So I just, and that was the whole point. They wanted me to show you how you can get in and out of a trade before it settles. And you can see in 5-minute binaries how quickly the price of these things move and how the probability of them change. All right. I hopefully that helped you see that. I wanted to demonstrate that briefly, and you got it a real time. Again, that was in a demo environment. It was in a demo environment. With that, thank you again so much for joining us today. We really hope we see you tomorrow. And I do want to wish everyone good luck in the markets, and we look forward to having you with us tomorrow.